Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the euro currency. So it seems that our talkings about the situation in the euro, that it should be interesting and big activity should return back on the market, was a prophecy, because today it indeed looks much more interesting compared to what we saw in the beginning of the week. And it seems that we were correct on the suggestion that the market breaks the normal bullish behavior, erasing the points where it was able to turn up with a downward tendency, and the situation that we talked about on the dollar index just confirms this, and it seems that we were correct, and indeed market shows the downward acceleration. So in the modern market, guys, it is very important to understand what stands beyond particular swings on the market, and you should recognize the areas where market still keep the existing sentiment, where it still keep chances and validity of the current setup, at the points where it stands 50-50, where it's not the area where you would like to take the position, but you're still watching, and an area where all hopes on the previous direction are lost. So, and currently on the euro currency, we could turn to our second scenario that we discussed in the weekly report. We said first we will work with this positive momentum that have been provided by the Jerome Powell statement. As soon as it will be erased, the opposite scenario will open, and we return back to the idea of the downward continuation. Now it's time to do this. Actually, market stands just with a few pips on challenging of these lows. Since the upward action has been totally erased, it means something. So first of all, market doesn't support the idea of the weaker dollar in the nearest future. But what is more important, and we told about it yesterday, is that currently market does not treat the dovish by visuality, the dovish steps from by the Fed, as the factors that should weaken the dollar. They mostly see in these measures of the Fed Reserve the attempt to support existing growth in the United States economy, to make it as longer as possible. From that standpoint, in the longer term perspective, as we said, that will be a positive sign for the dollar, because it will keep the economy at the current pace. They're trying to anticipate possible negative impact and to make the growth smoother in the longer. And the longer term perspective, medium term perspective, that will provide better statistics, better economy situation compared to the rivals, I mean European Union in particular, and that will be the positive sign for the dollar. But we will get probably these kind of actions rather often, just because of the momentum emotional reactions. So Fed cut the rate, market reacts, but then turns to the previous direction, correctly understand what is going on. Jerome Powell said that rate will be cut, market reacts, but then turns back. So that is what we talked about in the weekly report. That's the conclusion that we come to. And here we just see the confirmation of our suggestion on the market. For us, the only uncertainty is the durability of these emotional reactions. So it could get some continuation to the 1265, or it will be very short term as at this moment. It's currently. So now back to the technical situation. Currently we have few targets on the market. First is it will be butterfly probably. It's 109.65 area. Next will be 109.30. That is XLP of the same ABC top pattern. So if you remember, that was the hand and shoulders. Yesterday we talked about it on the dollar index. Hand and shoulders, ABCD. OP has been hit, reaction up. Now we have the downward continuation right to the XOP 109.30. It is interesting that right at this area also stands the yearly pivot support one. It's 109.34 on the euro currency. That will be nearest destination point. Today I will not be surprised if the market will challenge these lows, and theoretically it could reach this 109.65 just because it's not that they were sold. So we're sold, so it stands right here. And here we have actually free space. Major 618 support 1185 already has been broken on the weekly chart. So actually here we see what we talked about yesterday on the monthly chart, mentioning the bearish engulfing pattern there, and it's overall bearish pattern. That's what we have on the daily. On the 4-hour time frame chart, we have inner to the butterfly ABCD pattern with the target 109.62. So also very close. So approximately in the same area as the daily targets. So here we have. On the hourly chart, you can see that market gradually but stubbornly moves lower, and here we see acceleration as soon as the support areas have been broken. That our OP has been hit, taken out of these lows. By the way, the daily grabbers that we have mentioned yesterday has worked. XOP stands 110 even, so it will be nearest target. And here, guys, I would like to return back to discussion of understanding of the swings on the market. So recall from which moment we have started in the beginning of the week. What was the initial trading plan? We said that until market stands above the support area, it keep bullish sentiment. It's valid because by itself this support area was rather strong. It was natural support, 618 support, ABCD XOP target was here, pivot point. So potentially this support is more than enough to hold any retracement if market indeed bullish. Any normal bullish market turns here up. But what we've got after that, minor ABCD retracement and downward breakout. That was the moment, this break-even area where we should be worried with the bullish perspective. So that's the point when the market dropped below. That's the point where we should stop taking any long position. And above this area, it is possible. Here, that was the border between the bullish and bearish sentiment. Here was still some question because market stands at the deep support areas, still has not erased yet the all action, and here we could still sitting on the hands and watching what will happen. But that has killed overall bullish sentiment. So when you see these moments on the chart, this is easy for you to understand what's going on. And currently, if you take a look at the daily chart of the dollar index, yesterday we talked about the same swings on the dollar index. What has happened here? So what we could recognize on this chart. ABCD, this is clear, hand and shoulders, first target OP, retracement of the OP. This is classical price behavior. But what happened next? Why here we've got some concern? Take a look, and here we have catalyst equal to sell pattern. That was potentially the first chance to reverse down. It's ABCD XOP. Here was the catalyst equal to sell. That was the left wing. We talked about it in our videos. Market starts downward action, which is accelerated by Jerome Powell statement. It's perfect bearish setup here, but it has got now continuation. And that action here at this point was absolutely irrational for a bearish setup, because market here's normally bearish market should continue to move down. By this action above this area, the 222 sell has been erased totally. It means that market has completed just the 30% or 50% target of this pattern and continue to move higher. As soon as it comes above the top, it means that this pattern is not valid anymore, and overall bearish setup is destroyed, because market has exceeded the point where market starts the bearish action. So it means that we are turning back to the larger setup with this ABCD pattern, and it again starts to work. That's why I marked this top by this red line yesterday, red arrow, and market is coming higher. So we're still with this ABCD with the same XOP target around 99.20 area. That's on the dollar index. It's the same XOP that we are watching on the euro currency right now. So this is what we have to see beyond the swings on the market. So when you understand what stands beyond the swing, when the market mechanics, what's really is going on, where you could identify the crucial point in the market, that becomes much easier to understand what's going on and what direction market will follow. So of course you will make the mistake sometime, because on the market every minute some new information is coming, and it will definitely make impact. But in terms of the probability, here we are working with the probabilities, so the probability should be on our side. But in general, euro will be mostly right than wrong, and that will provide the positive result. So now we have the new setup on the euro, and continue to work with this setup. So it's relatively new, not quite new, because we are talked about it in the weekly report, but it starts to work. And now we are watching to the targets that's provided by this bearish setup on the euro.